Hey everybody, good to be here. My name's Brent Moore. It's time for Long Options. Just glad you joined us. Markets have been volatile, and that's kind of what I want to talk about today. I want to talk about trading in anticipation of potential market volatility. I mean, we've already had some volatility, but tomorrow is a big day with announcements on tariffs and stuff like that. And whether you're pro-tariff or not pro-tariff, that doesn't matter. What our goal here is, how are we going to trade that? So that's what we're going to try and get to today. Helping me out is Kathy Wynn, who's helping me out in the chat. Appreciate Kathy. And so as you have questions, feel free to type those in the chat between Kathy and myself. We'll do our best. Also, remember, you can always follow me on X, if you like, at Brent Moore's CS. Before we get into the heart of the matter here, though, let's hit some disclosures. Options do carry a high level of risk and are not suitable for all investors. Information today is for general informational purposes only. And it's not an individual recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money application is provided for educational purposes only. I may not factor in commissions in these trades. Realize they're there, and you need to be aware of that and factor that. All investing does involve risk, including risk of loss. Past performance of any security or strategy does not guarantee future results. And there we go. I think that's good. Let's head on over to the markets. Where are we at on the S&P 500? We're actually up a little bit. I was looking at the markets earlier today, and they were up and down. Oh, I'm getting a little tired of the up and down. We've seen this quite a lot here lately. I know other of you are a little, I don't know, maybe it adds interest in the markets, perhaps. Maybe that's a good thing. I don't know. We'll see. So what I want to do today is I want to talk about trading in anticipation of potential moves, particularly in light of tomorrow, where I don't know whether the market's going up or down tomorrow. I don't know what's going to happen tomorrow. I would kind of expect some market volatility tomorrow, and with announcements of tariffs and what they're going to be at. There's certainly a lot of uncertainty in the market. I also want to talk to you about looking at a potentially different source for trade ideas than one maybe you've considered before. Namely, that's the trade flash. So I want to talk about that. And then I want to kind of illustrate these with example trades as well. Of course, the market has been volatile lately. You can see that in the VIX. I mean, the VIX right now, it's down a little bit today. We're down about the 22 range. We're down to about the 22 range, but that is an elevated level. I'm not going to spend the time to go back to longer term charts, but I think most of you have seen the VIX before and know that 22 is a relatively elevated range. So we'll see on that. One thing, as we're talking about this volatility, and we say, well, look, I don't know whether this market is going to go up or down. One thing that can benefit you with long options, though, is this asymmetry in terms of risk reward on long options. Let me give you an example. I'm going to pull up a stock here. I'm just going to pull up Pfizer. This is an example stock, but it's one I saw earlier on the Trade Flash, which I'll show you later on this. But I was just looking at, here's Pfizer, and we kind of had this channel on Pfizer. You may consider this to be more of a support level, which we're kind of at, but maybe dipping below. We're flirting with it. We're right there. Here's the upper end. Maybe you're bullish. Maybe you're bearish on this. But let me give you an example trade here. I'm going to go to the Analyze tab. Here's just a sample long call on Pfizer. It doesn't matter what long call you do. Okay, so don't worry about date or time. This isn't really an example trade. This is just to illustrate something here. And that is, this is what the risk profile looks like for a long call. And it doesn't matter what stock we're looking at. This is what the risk profile is going to look like, basically, essentially. This is your break-even point. I'll kind of draw over that in yellow. Okay, that's kind of your break-even point. So any point above that is a gain. Any point below that is a loss. Here's our current price right there. And let's do this. Let's consider what our potential gain is. Look what happens as the stock goes up more and more and more. It goes up more and more and more. We have more and more potential gain as the stock goes up. As the stock heads this way, we have more potential gain. What happens if the stock goes down? Well, we have a potential loss, no doubt. In fact, we're starting out in a losing position. It's a negative theta trade. Times decay is working against us. We need the stock to move down. But if it does go down, notice what happens here. It actually flattens out. Okay, flattens out really quickly. In other words, when I say there's an asymmetry there, there's more potential this way than there is downside this way. Okay, now, there's pros and cons to that. One of the prices you pay for that is it's not a high probability trade. If the stock stays right where it's at, that's not great shape on that. And the same thing is true if we do a put here, okay? And so if I were to, let me see if I can change that. Well, this just let me switch it to put. There's a put. Kind of the same thing. I'll be a little quicker on this here. On the put, we have that kind of asymmetry, except to the downside there. So that's one positive, and I already mentioned some of the risks of long options, and that's the subject of this class. You know, Paul in the chat said, well, you know what about selling options, high volatility, or excuse me, selling options where you have negative vega trades, negative vega selling options? That may be something you want to consider. Maybe it's just outside of what we're doing here today. We're doing long options in this class, of course, there. And Tim said, this market's kind of crazy. I may just sit out of this. That very well is a possibility as well. But I want to talk about, if you do have a conviction about this, what do you want to do? Let's take one other look here, and just to kind of an illustration of the volatility of, I'm going to throw an ATR on this chart. This is the S&P 500, by the way. Let me just get rid of that and throw on an ATR. So this is average true range. This is just kind of showing how much from day to day is the average move between high and low, including the gaps in between days and whatnot. Look what's happened on the ATR of late, okay? Here, it was down here, so this is like, you can see the scale over here, and you can see how this has gone up over time, okay? And so that's just testifying to the fact that we have more volatility, and certainly that's kind of just going with what we're saying. But this tomorrow, April 2nd, is a day that we've been looking at for the last month or more, of saying, yeah, this is the day where we're getting more information. The market doesn't like uncertainty, and so implied volatilities may drop tomorrow, but we may very well see a big move in that stock. Now, of course, if you're bearish right now and you think, the market's not going to take to it well, we could just buy a put. Okay, fair enough. Buy a put. You can buy a put. That's one way to take advantage of a bearish move if you think it's going to go down. If you think the market's going to go up, you could buy a call, right? You guys know that. This is long, calls are bullish. But here's what I want to mention, and you may kind of consider with a little bit more, I don't know, nuance. I don't know if that's the word here. Here's the NASDAQ. Okay, looks similar to the SPX in a way. Tends to move a little bit more than the SPX. Here's your average true range going up. Let me clear out of that right now. That kind of illustrated my point here. But you can see, we've had this like dip down here. But what about this scenario? Can you envision this scenario? What if tomorrow the market reacts to a very negative in a very negative manner. We go way down initially, but then intraday, then we get a bounce and a rally. Can you envision that? I see that happen all the time. Now, I don't know this is going to happen tomorrow, but a lot of times you get bad news, bad economic report or something like that, something that spooks the market. And the market, and for here I'm saying this is our index, the market goes down initially, but then it kind of picks up a bid, so to speak, and it rallies from there. Is that a possibility? Yeah, I'd say that's a possibility. So what if you wanted to do a trade based on that? Well, you can do that. So here's what I'm proposing in terms of our example trade for this class, okay? For our example trade for this class. And that is, we do a long call, but we put an order in that's going to buy that long call if we dip down. So in other words, if we get that dip down on the news, the stock, then we get into the long call at that point. Can we do that on the index? Yeah. Now, what if the index drops down and it just keeps going down? Then this trade would lose. This trade would, I'm sure, would lose in that case if it just keeps going down, if we do a long call in that case. But what if you decided that's something I want to speculate on? And remember, there's different purposes of options. One purpose of options, some people use it for income, some people use them for hedging. One purpose is to speculate. So if we were to speculate on that and say, what if that stock drops down? What if we drop down below that 19,000 mark tomorrow? And I want to buy a long call on that. Well, let's do that. Let's illustrate that trade. Now, that's buying a long call. Let me just mention something that Paul brought up in the chat. Paul said, well, you could do a long call and a long put at the same time. And if the stock goes way up, the call would do great, the put wouldn't do very well. But if it goes up enough, because of that asymmetry I talked about before, it actually may work out pretty well. Or vice versa. If the market index here goes way down, yeah, we'd be losing on our long call, but we may possibly gain more if it goes down enough on the long put to make up for that and end up with a positive trade. Yeah, that's a long straddle, and so that's certainly a possibility. But let's go back to the trade I'm saying here. I'm saying dip down on initial news and then recover. Well, let's do that trade here. So here's what I'm going to do. I'm going to go to the trade tab. I'm going to, and this is going to be kind of I'm not going to go out real long term here. I'll just go out a couple weeks on this. Let me go here. I'm going to go down to, now we said buy around 19,000. Okay. Buy around 19,000. That was just a reminder. Here's the 19,000 mark. I only want to buy on that dip though. So what I'm going to do is I'm going to go here. I'm going to go to that 19,000. This would be at the money at that point. Okay. Right now it's not at the money. Right now that's in the money. But what I'm going to do is I'm going to buy this. I'm going to right click. I'm going to buy custom with a stop. Okay. So now I'm in order to buy. But I don't want to buy right now. I'm going to make this a market order. I'm going to make it good till canceled. And because I want, this is primarily intended for tomorrow, to be honest. So if I do a day order, that's not going to do me any good. And I'm going to click on the little gear over here. So the little gear, I'm going to click on that gear. It's going to bring up this menu right over here. Trying to make it size it down just a little bit so you can maybe see it a little bit better there. Okay. So here we go. Let's do this. Let's go and look at, and I'm going to submit. I'm only going to submit this. Excuse me. I'm going to scroll down and I'm going to submit if it marks, if the NDX itself marks less than or equal to and we said 19,000 on that. Okay. Let me click on save here. Now, Scott brought up a good point. Let's look at this. There's no open interest on this. Well, let's go to weekly. Let me look at this one instead. Not showing much open interest there either. That's kind of weird. Why are we not showing any open interest on these? That's a little surprising to me, to be honest. It's not showing anything on any contracts. I'm not sure why that is. I'm not sure why. This is a liquid. This is pretty liquid typically, and it's not showing any open interest on those. Let me just go out to, let's go out a little, let's go to the, here we go. Yeah, you know what? Here's what I'm gonna do. That's a good point, Scott, and I appreciate you pointing that out. Let's go to the regular monthly contracts. You see what we got here? These weekly contracts are nice because they give you a lot of expiration dates, don't they? Right? Expiring in 9 days, expiring in 10 days, 13, 14, etc. But there is no open interest on this. So let's go here and let's do this one, which are the regular contracts. And now we're seeing more people trading that. Okay, so that's what I'm going to do here. And of course, you know, we could do a similar thing, by the way, on the S&P 500. The S&P 500, we may pick up some more trading on that. That's no problem. It essentially, I think a lot of traders would expect if the NDX is going up a lot, the SPX is going up a lot as well. But here's what I'm going to do. I'm going to go to the 19,000. I'm going to go to that. My spread here, 682 to 678 is, you know, for something that expensive, that's actually doesn't seem terrible. So I'm going to buy custom with that. And we're going to go buy custom with a stop. We're going to do what we did before. Market good till cancel. I'm going to go to that gear. We're going to scroll down a little bit. We're going to go click right here. We're going to say if the NDX marks less than or equal to 19,000. Okay, 19,000 right there. I'm going to click on save. When is this going to buy? It will only buy if the NASDAQ marks less than or equal to 19,000. So we are not buying right now. We are only buying if the market volatility today, or you know, maybe this is more intended for tomorrow, knocks this down a fair amount. Then we'd buy. Now this is kind of analogous, by the way, to buying the stock, but putting a stock order and buying with a limit order and saying, oh, you know, say it's a $100 stock. I only want to buy this stock if it drops down to $90 or something, and just putting in a limit order on that stock. Now, trading options is not the same as trading stocks, but I'm just trying to make a comparison between the order types here on this. Okay? So there we go. Now, what about this order? This order is basically, hey, I'm going to get out if we buy this and it just starts going south on us. Okay, if it just starts going south on us. So what I'm going to do here is I'm going to trigger this stop order, and I'm going to make this let me just expand this field a little bit here. Okay. And I'm going to buy this, I'm going to trigger this stop order. And I'm just going to put in a stop order. I'm not anticipating it filling, we're just losing that much on it, but it could happen. I'm going to put that in. And then I'm also going to make that stop good till canceled. Good till canceled. And then we're going to confirm and send. And this is going to be a long option, so I'm going to put it in that bucket. Let's just review. We're buying an NDX option, April 17th expiration, 19,000 strike. Okay, 19,000 strike. We're only going to buy that if the NASDAQ marks at or below 19,000. If it doesn't go down below there, this will not go. And we'll just look to cancel that trade probably. And then we're going to sell if we hit 50% of our purchase price on that. I'm going to send that order, and it's thinking. It's there, right? It's not filling right away because we're not below 19,000 on that index. Okay. Now, I don't, again, I don't know what the market is going to do. The market would have to take a decent dip, but not an unrealistic dip for it to go down there. And someone said earlier, said that, the market does that kind of dip thing and rebound a lot on Fed Day. It does do that a lot on Fed Day. Yes. Yeah, we can put in, and another thing we can do is you could cancel that. We could put an order to cancel that, to open. Let me right click on this. I'm going to cancel and replace this. Let me just click on this gear here and just point that out. You could say, in addition to this, we already added this in there. I could say, I want to cancel that when? Tomorrow, maybe. Let's see, April 2nd. And this is showing in my local time. So I'll put this in at 1:20. Oops, that's supposed to be not one, it's 13:20 my time there. Save that and send that and replace that. There we go. Okay. So there we go. Let me just make sure that, yeah, that's still in place. Okay. So we got that order. So Kevin, I'm glad you brought that up. Kevin said, maybe we just want to cancel that at the end of the day tomorrow, basically, if it doesn't happen. That's what you do on trading, right? We're a little bit more speculative on this class here today, but you come up with a hypothesis, if you will. I think the market is going to do this. I may be wrong. I think the market is going to do this, and then you act accordingly. If you think the market is just going to go up from the get-go tomorrow, you would consider possibly doing a long call today. If you think the market is just going to go down tomorrow and keep on going down, you may consider entering a long put today. If you expect the dipsy-do reversal thing tomorrow, you may consider something similar to what I did here today on that one. Let me give you another example here. Okay, and this would be just kind of the opposite, I guess. I'm going to pull up and I don't want to stick all the time with index options, so I'm going to pull up, if I can put the Adobe, ADBE, make sure I got that. Adobe's been in a downtrend. And in this class, we often use technical analysis, and we're going to continue to use technical analysis. Tomorrow isn't so much a technical trade, it's just a volatility trade, to be very honest. And so there's my technical trade. But if we're doing technical trades, I'm going to look at things like trend. Okay. Well, the trend has been down. And so if you're doing long options and the trend is down, a lot of technical traders would say, I may do a long put. Well, we're going to do that, but what if we expect, hey, we kind of have this thing going on here right now. Maybe this retraces a little bit halfway? I don't know. And what's halfway? Halfway is about 390. If this retraces a little bit, say above that 390 mark, I want to get in a long put. I'm going to go with the trend. My assumption is we're going to bounce here, consider the consolidation a little bit, but then do something. But the trade is a longer term downward trend that's going to continue is the idea on this. If I wanted to, I could kind of draw a trend line here, something like that. I have my moving averages. We're assuming those are going to hold. We're also going to try and get in at a little better price there. Okay. So there you go. All right. So 390. So how would we do? Well, you do the same thing. Let's go to Adobe. I'm going to go a little longer term though here on this. I'm going to go make this more of a go out. Should we go longer? 80 days? Longer term trade. Bearish. We're not going to stay in. We're not going to plan on staying the whole 80 days. But if indeed this happens, I'm going to be happy to stay in as long as it keeps trending, down, as long as it doesn't break our trend line. Okay. So here's what I'm going to do. I'm going to go here. I'm going out longer term. Sometimes we talk about we did shorter term trades. This is longer term trades. Last week, we talked about doing trend trades. We talked about some of those rules. Very often in this class, we're using an expiration date 50 to 100 days out or 120 days out or something like that, right? So 80 days kind of fits in there, okay? So, so there you go. So, but it's going to be a long put. At the money right now is 380. 390 would be at the money if at the point where we're looking to enter the trade. Okay, I'm going to look at my bid-ask spread right there, okay, about 35 cents. It's moving. Okay, it's moving. And there we go. So let's do that. I'm going to right-click on this. I'm going to buy custom with stop. And we'll do this one just slightly different. This is a long put. I'm going to do this part the same. I'm going to say market, good till canceled. I'm going to click on the little conditional order deal, the order rules part. And I'm going to say, I only want to get in this if Adobe marks greater than or equal to. And we said 390 on that retracement. And on this one, instead of putting that stop based on the 50% level, what I'm going to do is I'm going to make it a market good till canceled. And we're going to say, hey, if it ends up breaking above this 400 level, then I'm going to get out. Okay, then I'm going to get out. So gear, we're going to, let's see, we're going to, this is our sell to get out of that trade if it marks greater than or equal to 400, okay, 400. Okay. Save, confirm and send, long single options. We're going to send that order there, okay? All right. Yeah, oh boy, questions in the chat. What's going to happen tomorrow? I don't know what's going to happen tomorrow, folks. I really don't. I mean, I'd expect volatility, right? I don't know how the market's going to react. Today's the day, tomorrow's the day that people have been looking for a while. I think one possible scenario is the one we've talked about already, that we did the trade for. That's certainly a possible scenario. The market dips down on news, worried, sells off, but then it recovers midday. So we'll see. We'll see. Yeah, it's tough to know what to do on that. Now, I mentioned earlier, you know, I brought up the Pfizer chart earlier, and I was looking at that because one possible way of coming up with trade ideas. Agariba said, how do I, you know, find out, how do we hypothesize on what's going to happen? I don't know. One way to do it, and it's certainly not a surefire way by any means, folks. One way to do it, though, is to look at what people are doing. Can you do that? Can you see what other trades people are doing? Yeah, one way to do that is to use this Trade Flash. Here's where I saw Pfizer came up in Trade Flash. If you aren't familiar with Trade Flash, it's a gadget. So you go to the little plus sign, it gives you a list of gadgets you can use. Trade Flash is one of those. And if you don't have anything in there, it'll just give you a list of stocks. You can scroll down the list and see. But if you put in a particular symbol there, it gives you trades. Here, Pfizer, this is today, they're calling this a big delta trade. And they show big delta trades, either bullish or bearish, doesn't matter. But these are trades that presumably institutions or somebody with big pockets, I guess, are doing. Because look, they're buying 9,500 calls. Well, I don't think anybody probably listening to me right now is probably going to buy 9,500 calls here. So there we go. That's the idea here. Is this may be an idea generator for you, but you're not going to match. You're not going to match the trade necessarily, but maybe it gives you an idea on here. So, but if I'm buying calls, this is a May 16th call, they're bullish on this. Okay. I'm not going to do that trade, but I just want to point out to you, they're banking on this between now and I guess May 16th of this going up. Okay. So that's one way to do it. Now you need to be, sometimes you need to use a little discernment on this. Let me show you another one I saw. Okay. Let me just do this. Here's Bank of America. Okay. What do we got here? Well, you can say, oh, they're selling a call. Well, they are, but they're also buying a put at the same time. So what you can see is you can see different types of trades here on this. In other words, in this case, if you're selling a call and you're buying, same expiration date, check out the expiration date, okay, same amount, this is clearly the same entity doing at the same time, same person doing both of those trades at once. Okay. So if you're buying a put and selling a call, that's a short synthetic, basically. Beyond the scope of this class right now, but just realize that. Okay. And this would be, most people aren't going to even be approved to do this trade here on this. You're just shorting those calls. There's naked calls here. So but my point here isn't to, talk about this trade. The point is, when you look at these big delta trades, look and see what type of trade it is. It may be a spread trade, and your clues on if it's a spread trade are if more than one trade goes in at the exact same time, especially if they're the same amount, same quantity, that would be kind of a giveaway on that, right? So, yeah, and Paul said that indicates a bearish sentiment. Yeah, this would be a very bearish trade there on there. Somebody is bearish, whoever that person is, I don't know who that person is, somebody is bearish on Bank of America. Okay. So there's a trade. And of course, they have earnings coming up, and that's a possibility. We may circle back around on that one there, but let's look at some others that I saw here, because I kind of want to give you an example. Here's Nike. Oh, Nike, we have a few. Do some of these seem like they may be connected to one another? I've got 3 trades here. Yeah, I mean, look, at 758, the same quantity, I'm buying a put, I'm selling a put. Okay, buying a put, selling a put, same expiration, different strikes. There's your spread trade, right? What do we got when we're long one put? Okay, long one put at 62.50, and we're short another put at 58. Okay, put. That's a long put vertical. Again, outside the scope of this class, but we can match those up. This one, though, seems like a separate trade entirely. So that is a bearish trade. This guy's bearish. This guy right here is just straight long call, bullish trade. Okay. And yes, long put vertical. I may have said short put vertical. I meant long put vertical if I said that, by the way there. Okay. So there we go. So look, there's a possible trade ideas. Let's look at just a couple more here. Let's check on time. We're doing okay on time here. Okay. Let's go. Let's look at this one. There's news today on the airlines. Okay. News on the airlines today. Jefferies. Oh, by the way, if you want to see the news, you can go to live news. Okay. Let me go to AAL. And this is kind of a neat little gadget there. Okay. This is a neat little gadget. Live news. Okay. To be honest, I don't leave this trade flash up. I don't use this as much. This I use quite a bit. I use watch lists most of all, but there's your live news. Okay. So So there you go. Here's my American Airlines news. And if you were to read through these, if you want to read through these, you can just click on them or double click on them. And Jefferies downgrades basically major airlines, Southwest, Delta, American, okay, which may be a reason that people are doing trades on them today. That would be one reason. There's one reason. So there we go. What is this person doing? Well, they're buying a call. Okay, they're buying a call here on this. Now, Thea said, well, look, is it possible that they're exiting a current position? It is possible that they're exiting a current position. Given the news today on American Airlines, it seems like this is likely in response to that news and the sell-off, and people are expecting a turnaround on that. That could be. But one thing you can do is you can go to the trade tab. You can go down, scroll on down to today's option statistics, okay? And you can look and see where these items are traded, if they're traded at the bid or the ask, okay? Traded at the ask or above or traded at the bid or below. It doesn't guarantee you that, but the general assumption of traders is when the trades are coming in at the ask price or more, that is going to be a long position. That's the general interpretation on that. If they're traded at the bid price or less, that is generally considered to be more of a selling position, okay? Selling, or this is long or buying, this is shorter selling there, okay? So there we go. That's that, okay? All right, here we go. Let's head on. Let's go here. And these trades, by the way, these are public knowledge. These are public, for everybody to see. Any trader can see these. They don't tell. It doesn't say who did these trades, but this is news that everybody out there is open to. So Schwab is not revealing anything that isn't available to anybody else here on this. Okay. So let's go and let's look at that. So there's another possible trade. This one is a bullish trade. Now, if you're doing technical analysis, is this a technically driven trade? I'm guessing probably not. Let me go out a little longer term. Let me go 3-year. I mean, what the trader could be thinking is they could be saying, well, look, when we're down here, we've kind of hit some support down here. Expecting it to bounce. That could be their mindset on this. But when we're looking at this, the trend is down. Momentum is down pretty much. I mean, I guess the best thing you could say about it is we're near the high of the day. We traded a lot lower earlier today. But I suspect a lot of these are more valuation dependent trades. In other words, they feel, hey, look, American Airlines at 18 was an expensive stock, 16 expensive, 14 expensive. We're getting down to the $10, $11 range. Maybe that's a buy, okay? Regardless of the Jefferies downgrade. So that's certainly one way to do it. That's not going to conform to our traditional technical analysis if we do that. Here's another one. Here's Lyft. This was another one that came in LYFT. Okay. Here's Lyft. Okay. So what do we got? And let me get rid of this. Okay. Same trade came across at the same time. Okay, buying 5,000, okay. Buying 5,000 calls, April 17, same expiration date, April 2nd, buying 2,500 calls. This, these are both entered at the same time. So this is just a kind of just a plain old bullish trade on there. So if you're interested, this is a way to let's see, generate trade ideas, this would be a consideration. Let me look at one more here. Okay. There's NVIDIA. Okay. Let me just, you can link this, by the way. NVIDIA. Okay, well, we got a lot of trades coming in on NVIDIA. NVIDIA is a popular stock, a lot of trades coming in, including, here's large equity trades. In other words, this is just stock shares, okay? But here's our delta trades on here. Buying 5,000 puts, bearish, okay? Buying 5,000 puts, bearish, different strikes. This is just a plain old bearish trade right here. So if we wanted to do a long put on this and mimic their trade, it doesn't mean they're right. They may be completely wrong. But if you wanted to, you could look and you could say, hey, look, they're doing April trades, long April puts. They're doing long May puts. They're doing April 25th and May 16th puts. May 16th, $100 puts. Let's take a look at it. May 16th, $100 put, little bit out of the money. Delta on that is about 27. That means it's a low, it means it needs it to move. It's a more aggressive type trade. If we were to totally mimic their trade, and you can see that open interest on that contract, a lot of open interest on this anyway, but especially on this one, these trades we just looked at probably aren't hurting the case here on this. But we're not locked in to doing the trade that they did. Maybe this is just an idea generation. Maybe we go not quite out of the money so much. Maybe we go to that 37 delta. Maybe we go right at the money to the 48 delta. Okay, and I can click on this. And I can say, here's my long put. I'm going to make it first trigger sequence. Let me close this. I'm going to right click on this. I'm going to create I meant to do an opposite order. Well, we'll do that. We'll just switch this from buy to sell. Okay. And here's my trade. What's my current price right now? Well, about 725. I'm going to put, this is at the money, I'm going to put in roughly a 50%, maybe just a little bit higher than that, stop on this. So I'm going to make this a sell stop, good till canceled. I'm going to make this, we'll put this stop in at $4 here, okay? At the money contracts, often with options, long puts or long calls, in this class, we'll put our stop in 50%, maybe plus, round up a little bit, move up just a little bit there, okay? There we go. And, make sure your quantity makes sense for what you want here. Price is showing 725, which is mid and natural, showing about the same thing here. Confirm and send. You can review that. We can put this in our long single options. We can send that order there. Okay. All right. Okay. I'm going to wrap up here because we are just about out of time. We have a whole bunch of classes, webcasts, folks. Go to the Trader Talk Schwab channel. We have classes on basic technical analysis, getting started with technical analysis. So there's a question in the chat, how do I learn more about higher highs and higher lows? That's kind of the basics of a trend. And so getting started with technical analysis would be a perfect class for you here on that one. And I'm trying to find that in my little thing. Oh yeah, Tuesdays, 2 o'clock Eastern time. That's recorded as well. So the key is you go to the Trader Talks channel. Just look at the playlist. You can find past episodes of this webcast. You can find episodes of Training with Technical Analysis. That's the next class coming up right now. Speaking of the devil, I should have realized that. That's what's coming up next. There's a survey link. Folks, we appreciate your feedback. There's a little link in the chat. Just click on that little link. It's a quick survey. I don't like long surveys. This one's a quick survey. Thank you, Kathy, for helping me out. Kathy Wynn helping us out in the chat. We appreciate her on that. And thank each of you for joining me today. Everybody have a wonderful rest of the day. Stay tuned for getting started with technical analysis. Bye-bye, everybody.